and it's a value transfer network, and that's the Bitcoin network. And then there's Bitcoin, which is the token that's traded on. And so those coins are used to use the network. I now understand a lot about Bitcoin and what the investment thesis with Bitcoin is. But it really dawned on me, and it especially dawned on me when one of the guys I was talking to said, it's a value transfer network. And so when I coupled a blockchain with, well, it's like a phone system like Verizon or like AT&T, but instead of sending communications, you can actually send money, assets, or value. And so when I did that, it's like, okay, so you don't know how email works. You don't necessarily have to know how a blockchain works. All you need to do is know that if you put the asset up and somebody buys the asset and they put the money up, the value transfer goes through immediately. And it doesn't matter whether I'm here in Chicago, you're there in Virginia, or it's somebody in Singapore, or it's somebody, in Argentina. It goes through and it's worldwide.
It highlights the fact that I think when people say cryptocurrency, they confuse the technology with the investment vehicle. Like everybody hears Bitcoin, and the only reason people are in Bitcoin is they think they can get rich, right? But really, many people are more fascinated by the technology behind it, which is what you're referring to right now. So when you say cryptocurrency blockchain, you're not necessarily referring to an investment vehicle in the cryptocurrency itself. Is that right?
That is 100% correct. So if you look at blockchain, so Bitcoin is two different things. Number one, it's a network, and it's a value transfer network, and that's the Bitcoin network. And then there's Bitcoin, which is the token that's traded on. And so those coins are used to use the network. But also, Bitcoin has an investment thesis that there's only going to be 21 million of them made. And so it's going to be like digital gold. So it's a lot harder to, stuff your pockets with, giant things of gold. You can just have it all up in your head and walk out of a country like Venezuela, or, perhaps, hopefully not. But, if you need to walk out of the United States, you can have it all up in your head. And, that's where your wealth is.
So, so crypto, Bitcoin on the one hand is a way to get money out of the system. Also easy to transfer instantaneously from one to another. When you're talking about the value network of transferring money or assets, it's like a wire transfer also. But
exactly,
tie cryptocurrency or blockchain more to real estate, right? Because how does real estate even relate to Bitcoin or crypto, any of that stuff? Like, where's draw us the connection there.
Okay, well, so we're in the business of investing in value, and we're in the business of owning value. So and you are somebody that does multifamily syndications. So if I wanted to get into one of your, there's a few different ways to do it, but the simplest thing is that you have an apartment building, you want to sell it to me, we can tokenize that, and we can do the transfer, and the transfer can go through. And as long as I put up the money and you put up the apartment building, and the transfer goes through, that's the simple thing. What I'm more interested in is syndications, and how you can make syndications more efficient, and how you can make syndications more accessible to a wider audience of people. Because as you and I both know, real estate is the best investment in the world. It's the most stable investment in the world. It's the only thing that gives you cash flow and all the rest of it. So I said, instead of like having people gamble in the stock market, what if we made it easier to invest in, commercial real estate that's income producing and all the rest of it?
All right, so that's interesting, Michael. Now we're getting somewhere. So how does tokenization or blockchain or any of this kind of stuff make syndications more accessible to more people?
The simple answer is that you and I both do probably typical 506c syndications, 506b syndications, so they're eligible for accredited investors. that whole process is all done in paper. So, there might be DocuSigns, there might be this, there might be that. But not only do you have to track all that on paper, and then you make your payouts in paper, and you might send checks out in paper. What this does is the shares are all the same. So let's say we have a Michael Blanc apartment, and let's just say for ease of use, because I told you I don't do math, all the investors, it's a total equity raise of $100,000, and each equity investor can put $10,000 in. So those shares, if we did it the traditional way, you know how to do that. You would distribute that and all the rest of it. With a security token offering, it would be exactly the same thing, except it would all be digital, and those shares would be recorded to a blockchain. And so the key thing about that then is those shares are now tradable. So after a 1-year lockup period, the investors in those shares could potentially trade them to accredited or non-accredited investors. And also, it helps you out because it makes it easier, number one, for you to keep track of your investors, makes it easier and less expensive for you to pay your investors. So with the security tokens, your investors can get paid as an ACH payment directly to their bank account, or they could choose to take their money in what's called a USD stablecoin. So it's a dollar stablecoin, or they could take it in some form of crypto. So your investors could be like, they might be US citizens, but they might be living in Costa Rica. So instead of having that all go through a US bank and then having to get it out of, it all goes directly, their money goes with them.
Now, this got to be governed somehow. Does the SEC govern any of this stuff at all, or are you like outside the system?
This is 100% governed. These are so our Liberty Fund offering is a 506c. It's all the same regulations that you would have. The 1-year lockup period is something that's been approved by the SEC. All the trading is regulated. You have to do for your investors what's called a KYC and an AML. So you need to know your customer, and you need to make sure they're not doing money laundering. And you have to do your accredited investor checks. There's people out there that are doing things not legally, and we started messing around with this probably in 2019, and it took us over 2 years to like completely figure it out. We actually had to like explain to the tokenization platform how to do real estate legally and all the rest of it. So it is 100% legal, and it's a regulated per all the SEC regulations.
All right. So if an LP has a tokenized investment, let's say it's $10,000, like you said, and now under what circumstances can that person sell their shares? Can they sell part of their shares? Does it have to be the whole $10,000? And then what is the process of actually selling their shares?
Well, so that's a good question. It would all depend on the operating documents, but most of it. So for example, in our fund, let's say somebody bought $100,000 worth and each of the shares were worth $10,000. What this does, it allows them to do estate planning. So I've got 2 kids, and so I could give 30,000 of the shares to one son, 30,000 shares to the other son, and keep 40,000 for my wife and I. You could do any number of things like that. You could also just decide you're going to sell off part of them. And some of the other things that are coming down the pike is that unlike in a syndication now, you could potentially borrow against your shares so you could get margin. So if you like what your investment is, I'm invested with Michael Blanc and things are going fantastic, and I know things are going fantastic, you could potentially deposit your shares and borrow against them, like perhaps 50%, and free up some of that money to use for something like another investment, or if you just have one of those life emergencies or have to pay for a wedding.
This is very interesting, where technology actually solves problems. And one of them
Right.
is the only downside for investing in commercial real estate is a lack of liquidity, right? You're like,
Right.
oh gosh, you have them 100,000 for 5 to 7 years. Ah, that's awful, right? Everything else is super awesome. And what I'm hearing you say that if you tokenize the investment, you actually create a market for that security that you can sell and get some liquidity out of.
Theoretically, I'd never tell anybody, like the people that were talking to me in like 2019, 2020, and still today, are all talking about this, massive liquidity. And I'm like, well, even on the stock market, if it's like, a thinly traded stock, there's not a tremendous amount of liquidity, but there's liquidity options. And so the liquidity options are, perhaps you can borrow against it. You could list it, and just, I could go to you and say, Michael, I've got this, investment in one of these properties with somebody else. Are you interested in investing in this? And we could just trade it peer to peer. So if we both agreed that the shares are worth $10,000, as long as you put up the $10,000 and I put up the shares, the trade goes through. You could also list them with a securities broker, and the securities broker could then sell them. And then there's these things called ATSs, which are mini exchanges. So there's much more liquidity options for you as an investor. And like I say, for sponsors, I believe this is going to really help sponsors take care of a lot of their investor management stuff that they've got, a lot of overhead with, dealing with investors and trying to service investors, making sure investors have the best experience possible. A lot of this stuff is automatically tracked on the blockchain, because at the end of the day, most people hear blockchain and they say, what is that? It's basically like a giant ledger. It's like a giant Excel spreadsheet that everybody can point to and say, this is the real ledger, and we can see that everybody agrees that this is the ledger.